Hey guys, today I'm going to be explaining why macro analysis is actually just as important as technical analysis. First, let me explain what technical and macro analysis is. Technical analysis basically just explains price behavior from historical price action. Macro analysis studies the influence that the markets have between the human behavior. Technical analysis is usually price, volume, trends, and support and resistance. To assess price, you use candlestick patterns and you also use chart patterns. Those two are going to give you a big edge. Just between that alone, most traders actually can become profitable. For volume, we use indicators to see right now to see what's happening in the market and see how much buying and selling is happening at certain prices. Trend indicators, those are able to identify patterns that it's easy for the human eye to recognize, like Kanaishi candles. If you configure it to the daily chart and you can see how what patterns are going up and you can see what patterns are going down, you can tell easily where the trends are, and you can just hop right in just using the candlestick pattern. Also, another important trending indicator is the moving averages. If you can get the 250 cross and get the golden cross, those are really good indicators. Another important technical analysis is supply and demand. That is able to determine where a good price level is and when to sell and when to buy. So if it hits the supply zone, usually that's considered the bottom, and it usually bounces off into that zone from like a hammer or anything like that, and it goes up to the demand zone. If it's in a reverse, sideways consolidating market, you can sell off the top, take profit, and you can short right back down to the supply zone. This can happen in between some pairs on Forex. Combining price, trends, support, and resistance, you can combine all these and you can honestly become profitable just by doing that. Some traders do, but I would say that it's even better to combine this with the macro analysis. Macro analysis has a lot of moving parts, such as the inflation, because this is all Forex factor. Inflation, CPI, year over year is more important than month over month. Kevin Wars, I know that was today. Also, you have roars, oil, that's what's happening right now in the market. So right now, risk is totally off. I don't know how the S&P 500 is still continuously going up in this time, but hey, it works. Another example right now is that there's twice as many sellers than there are buyers right now in the homes market. So essentially, the average price of homes are getting driven down just because no one's willing to buy them at these interest rates. And if you knew interest rates were going to be high, you could predicted that the sellers' prices were going to go down, and now you can really start to take advantage of some of these sellers if they're trying to get out and move some of their equity. But as you can see with this macro analysis, there's a lot of moving parts. You have to understand all of these news events and how they're going to impact the price of everything in the future. What will happen when Trump wars continues for another month? Will we see more airlines get taken out? And if they do, or if they don't, if they bail them out, that means they're going to be printing more money, and that means more inflation is going to happen, which means they're going to have to hike rates again, which means the dollar might continue also to rise. You see what I mean? There's so many different variables that can happen, because again, that's not a guarantee that they hike rates. Because if they keep hiking rates, the price of oil might shoot up even more. So we don't really know. And that's why with technical analysis, you're just back testing. So when you're back testing, you can just tell if your strategy was working or not. You can go back, review it, and you can say, oh, I was profitable. I'm like 45% of my trades, I was profitable. I had like 1 to 2R and stuff like that. You can't do that with macro analysis because you're taking the news and technical analysis and combining them. For example, today, I knew the CPI data was going to be green. And at that, I knew the dollar was going to keep on raising higher. And I also knew that Japan and China right now, they're selling a lot of U.S. treasuries. I know China's been stacking up on a lot of gold, and I know Japan's been trying to bring the price of the dollar-yen pair down because they don't like it being at 160 for some reason. So with that all being said, I knew the price of oil had to continue to go up, and I did, and I made over 10 grand today. So this is what I mean by using all of your macro and technical analysis together, because using macro analysis gives you that like extra confirmation, I would say, combining it with your technical analysis. But the one advantage I do have though versus a young trader is I've been in the game for 2 years, and also I've been learning a lot about how the politics and how the markets move with the politics. So again, it's also predicting what will happen in the politics. And if you can predict what will happen in politics, you can probably predict what's going to happen in the market. It's took me years to accumulate all of this knowledge. A whole bunch of reading, 1929, Too Big to Fail, understanding how the markets are influenced by politicians. It's a really big difference of understanding. And once you understand it, you really don't want to go back, because it's like a cheat code having it. What I would say to you guys is to help you learn macro analysis, I would say you can listen to Luke Belmar, Mark Moss, Graham Stephan. Those guys are really good. And I also use ChatGPT as in one way of, you basically ask it questions and give you scenarios of what would happen. Like, let's say if dollar index was going up with the bond market. So dollars going up and yields are going up. That means the commodities are usually going down, because usually that means it's a risk-off environment and countries are hoarding dollars, aka treasuries and bonds. So final takeaway, make sure if you're going to be using technical analysis, make sure you understand how price, candlesticks, chart patterns, how they all help you when identifying patterns in the future. Same thing with momentum trades or price trending trades. Same thing with support and resistance. If it can help you if you watch a lot of videos. I know some people like, Tory Trades does trend lines. But yeah, you can go find a YouTuber that does supply and demand. I know Bernard Sprinky, he does a lot of supply and demand videos. And if you can go find them and just watch their videos and learn a lot from them, that would help you. But I believe if you combine that with the macro analysis, why the politicians want higher interest rates and what that will do to certain hedge funds to get in position for that to happen, it will be a lot more easier, and you can kind of tell what cycles we're in the entire market. Well guys, that's all from me today. I hope you guys like and subscribe, and I'll see you all next time.